How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be continuing the crypto series. This is going to be part 13, and we're actually going to be delving into an interesting aspect of crypto, the crypto mining companies. So, I saw this great article in the Wall Street Journal, which basically was considering what has become known as the Trump effect on the crypto industry, and in particular, how is this affecting crypto mining companies? So, let's take a look at this. And then after we go through this article, I want to share with you guys a couple of things on just kind of Bitcoin. I just want to share with you guys like the price, some charts showing the price movements of Bitcoin over the last couple of years, last 10 years basically. And so we'll get to that toward the end. So hang in there. But let's go through this article here, which basically says the Trump crypto craze sent Bitcoin miners surging. But watch out. Like, what are the concerns here, basically? Investors have long used shares in Bitcoin miners to gain exposure to the digital currency, but there are better options available now. The Trump trade may have electrified all corners of the cryptocurrency market, but some ways of speculating on digital assets remain better than others. Following Donald Trump's victory in the presidential election, Bitcoin has risen above 90,000 to a record high, bolstered by his pledges to end a hostile regulatory regime and build up a national crypto reserve. The rally has also powered the stocks of companies that mine Bitcoin, such as Mara Holdings and Riot Platforms. And then here we get a nice chart. You could kind of see some of the different companies here: Cipher Mining, Riot Platforms, Mara Holdings, CoinShares, Valkyrie, Bitcoin Miners ETF. And then, we could kind of see the performance here, how some of that has really shot up. All their stocks basically shot up from, November 5th, but have kind of cooled off a little bit here over the last, couple weeks. But the article goes on to say here, like gold, Bitcoin derives most of its worth from the self-fulfilling notion that it is a store of value. Today, even Bitcoin bulls often admit that real-world applications for crypto will likely develop elsewhere. Also, like the precious metal, new supply is created by miners. In this case, companies that validate groups of Bitcoin transactions or blocks. To prove their legitimacy, validators must solve a complex mathematical puzzle, and they receive a block reward in exchange that currently amounts to 3.125 newly minted Bitcoin. For both Bitcoin and gold, shares in miners are tightly linked to swings in the underlying commodity, making them a common venue for equity investors to gain exposure. Miners have the commodity in inventory, Mara in particular. It held 1.7 billion in digital assets in September. Their revenues also surge whenever the value of their volatile output rises. Their costs vary less. Oddly, though, stock prices of gold miners rise higher than the metal in bull markets, but tend to even out in the long run, whereas Bitcoin miners are less volatile than the cryptocurrency. The CoinShares Valkyrie Bitcoin Miners ETF is up about 40% this year, even though the value of Bitcoin has doubled. One reason is that the yields of finding and exploring new gold sources are hard to predict, whereas Bitcoin's supply schedule is pre-programmed. Block rewards have cut in half every 4 years and are set to reach zero in 2140. Mining gets more expensive by design. The value of these rewards relative to the computational power needed to obtain them has gone from 0.02 Bitcoin per terahash / second a day to less than 0.001 Bitcoin between the end of 2019 and now, according to hashrateindex.com. To be sure, Bitcoin miners have other sources of income. For one, they also charge fees on Bitcoin transactions. Their overall revenues have recently jumped, leading profit margins to widen. But this is because every Bitcoin they earn has suddenly rocketed in price. Despite that, miners are grossing about 40 million a day compared with the 100 million they would have earned if block rewards hadn't halved in April. Data by blockchain.com suggests. In the US dollars, block rewards have gone from 141 per terahash / a second per day to $58. You can see here daily, this chart here, daily rewards for verifying 1 trillion hashes of Bitcoin per second, the 2020 halving, and then the 2024 halving. And then you could just see how that has really affected it, has really gone down. So It isn't just because of halvings either. The difficulty of mining Bitcoin automatically increases when the average time spent on a block falls below 10 minutes. This preserves the security of the network as computers become faster, but it also makes Bitcoin slow and ill-equipped to be the alternative payment system many hoped it would be. As a result, the rate of growth of Bitcoin transactions keeps slackening, even as speculative adoption of it surges. More payments are happening using workarounds and mostly bypass miners. This plus intense competition has also led transaction fees to decline. And then there are rising energy costs. In 2023, global Bitcoin miners used up as much electricity as Greece or Australia, according to International Energy estimates. Trump has made big promises to them, including cheap energy, but spending so much on solving pointless math makes little sense. That is why rival cryptocurrency Ethereum switched to a different verification system in 2022. Of course, market forces will eventually drive miners to charge higher transaction fees as block rewards evaporate, but this will turn them into low-margin intermediaries with an increasingly loose link to the value of Bitcoin. That is why miner stock may now be a poor way to bet on the cryptocurrency. They capture only a portion of the upside, but are very exposed to the downside. Bitcoin hasn't yet shown that it has gold's staying power, and the current rally rests on flimsy foundations. It could revert to being just a digital beanie baby. Many miners, such as Core Scientific, which emerged from bankruptcy in January, are already rerouting computational power to service generative artificial intelligence instead. Equity investors should think hard about throwing money at a useless asset. If they must, though, they should just hold the real thing, or at least one of the newly available spot exchange traded funds. So, and then this is a couple of interesting charts here real quick. So while the price of Bitcoin is at a record, rewards for mining them are falling. So 2010 to 2020 halving, 2020 halving to 2024 halving, 2024 halving to now, and then the latest. So you can see there, yeah, the rewards for mining them are falling off. And at the same time, what you have to understand is that in order to continue mining, you're going to need more and more computing power as time goes on. So you're going to have to spend more and more money. They're going to require just an enormous amount of electricity and much larger data centers in order to be able to continue mining at the pace. Meanwhile, the amount of Bitcoin you're going to be able to mine and the money you're going to be able to earn for doing it is going to continue to go down. So it's, like I said, it's going to be interesting. And a lot of them, like I said, a lot of these mining companies, because they have this computing power, have already shifted gears and have gone to more, trying to serve generative artificial intelligence and work with other, Amazon and Microsoft and X and things like that, and trying to help them, develop artificial intelligence. So like I said, I thought this was really interesting. Again, you don't always hear a whole lot about the Bitcoin miners and about this end of kind of the cryptocurrency industry. So I thought this was an interesting take on it. And then I just want to show everybody a couple of things here real quick. So, this is a chart here of basically Bitcoin's price history. You could basically see here, Bitcoin comes out in kind of like the end of 2008 and, really starts to come in, and it gets, kind of shoots up here halfway through 2013, approaching 2014. We get the spike up to over $1,000. But then this is the first rug pull. This is the first rug pull on Bitcoin right here. So you see the price, dramatically drops down there. But then starting in 2015, it starts to pick up steam again. Hits 20,000 basically in May of right around 2018 as the first crypto craze really starts to kick in. Then it has a pullback, drops from 20 down to 10,000. That's the second rug pull. But then it basically explodes up as we get the crypto craze. We get the big build up here. It jumps up to about 68, almost 69,000. And then, of course, 2002, is the what they call it, the winter, crypto winter in the crypto industry, which basically culminates in the collapse of FTX, and Bitcoin price goes from 69,000, drops all the way back to 18,000 in December of basically 2022, and now has ballooned all the way back up. Here we reached a high of 76,000 in November, but obviously has now jumped up. If we look at Coinbase here, and we could see here that basically Bitcoin is sitting at 99,875 right here, flirting with hitting 100,000. And you could see some of the other cryptocurrencies here: Ethereum, XRP, Tether, Solana, BNB, Dogecoin, Cardano, USDC, Tron, Avalanche, Shiba, if I'm saying that right. Coinbase is a very interesting site. I think you could get some great, you don't have to trade cryptocurrencies. You actually get some great research off of Coinbase. And then here's just another chart, here, just showing the price of Bitcoin and just, going from there and just showing its different price movements. So, again, just showing kind of the effects here, if you will, of the Trump trade as it was proposed, and kind of the effects that that's having on it, having on the crypto industry as a whole. So like I said, just some information to point out, some information, kind of how some of the crypto miners work. What are some of the benefits and potential pitfalls to investing in crypto miners if you want to go that route. But like I said, just another interesting aspect of the crypto industry that I thought I would cover here as part of the crypto series. If you have not watched any of the first 12 episodes of the crypto series, go check that out. I also did one live stream episode, which was just basically I did a BND strategy room crypto series special, which was about an hour and a half episode. If you want to go check that, I covered a whole bunch of basically crypto reports that came out from the BIZ, the Bank of International Settlements, the Financial Stability Board, the FSB. So very interesting information that was in a lot of those reports that I covered in that special report. So, but like I said, if you like that stuff, go check it out. I cover kind of the whole history of crypto and Bitcoin, kind of where it came from, where it went to, the crypto crash of 2022, where things have gone now. And so, like I said, I try to cover these different aspects, maybe some things that aren't normally covered all the time, and in a lot of the regular news or media that you see out there. And if you don't know much about cryptocurrency or crypto coins or anything like that, hopefully this series will be very informative to you, and you'll find out and get a lot of really good information. But I'll wrap up with basically, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to people. Check out some of the other content on the channel, especially the crypto series, and I will see everybody again real soon. Thanks a lot.